The Middle East, European, and African insurance marketplaces are undergoing a number of industry developments that bear watching. Here to discuss these markets is Mahesh Mistry. Mahesh is a Senior Director of Analytics in AM Best London office. Catherine Thomas. Catherine as well is a Senior Director of Analytics in AM Best London office. And Angela Yeo, Senior Director of Analytics in AM Best Amsterdam office. And Catherine, let's kick things off with you. What are some of the issues that are keeping insurers up at night in the London market?
Well, I suppose due to the nature of the business that's written in the London market, the above average CAT years in 2017 and 2018 have been important to that market. Last year we saw Hurricanes Florence and Michael, the California wildfires, and Typhoon Jebi in Japan. The year before, with the Harvey, Irma and Maria hurricanes, and again California wildfires, had an impact on performance. And we've also seen perhaps some movement in some of those, reserves on the set up for those CAT losses. But in addition to the CAT losses, there's also been some deterioration in underlying performance across the market, partly driven by the soft market conditions. Now, over the past 2 years, we've seen a real increased focus on remediation of some of that underlying business. So, for example, at Lloyd's, we've seen a very robust challenge as part of the business planning process. There's been the Decile 10 initiative, whereby syndicates have had to look at their worst performing classes of business and in the worst performing decile, and really look to show how they are going to remediate those portfolios. And as a result of that, we've seen business lines completely cut by some managing agents, or just business lines being cut back as well.
Is Brexit on the mind of insurers in the UK?
It absolutely is, and has been for the past few years. I think, not just in the London market, but across the whole UK insurance market. Politically, it's really the economic and political uncertainty associated with that that is weighing on the overall market. The issue of the potential loss of passporting rights once the UK leaves the EU has largely been dealt with by affected insurers. So we've seen a number of insurers that want to continue writing business in the EU post-Brexit, setting up EU subsidiaries, initiating Part 7 transfers of existing liabilities. But aside from that, associated with Brexit, once Brexit occurs, there is the economic fallout of that will clearly impact all insurers across the market. It's difficult at this stage to predict with any certainty as to what that impact will be. But factors such as further weakening of the sterling, leading to claims inflation, volatility in investment markets, as well as if there's a economic downturn, the impact that might have on demand for insurance and therefore premium volumes are of course concerns to all insurers in the UK.
Now, Angela, interest rates remain at historic lows across Europe. What impact is that having on insurers?
Sure. Well, the interest rates in Europe really have been low already since the financial crisis, and I would call it almost it's become the new norm. So the markets generally have adapted to it, and we see throughout the European countries that the capitalization is still very strong. Perhaps the German life sector is the one sector where we see the low interest rates having still an impact. Due to the products that have high guaranteed interest rate returns, and there we've seen some movements away from those, and new products being developed with less guarantees or zero guarantees. So companies are looking at their business profiles. They're looking at products that consume much of the capital, and as a consequence from that, developing new products that go in the direction of some hybrid products.
Now, Angela, wherever you go these days in insurance circles, insurers are talking about innovation. What innovation are we seeing from European insurers?
Well, innovation is a big topic, and it's been heavily discussed everywhere. we hear a lot about insurtech, we hear a lot about digitalization. What I've noticed that perhaps with some of the smaller companies, they're sometimes a little bit ahead of the game, possibly even. It goes into topics like wearable products, but innovation is not the only hot topic. We also discuss a lot the ESG and the cyber risk. So at AM Best, we are developing new criteria to deal with innovation. We have a set for ESG as well.
Yeah, there's a number of things which are on our radar as a rating agency. So there is a big push on the innovation side to see how our company's developing their insurtech and what gives them that competitive advantage over the other players in the market, whether it's on the pricing side, the claims management side, or even the distribution side. What is also of concern to us is about the accumulation risk that is evident in the market, not just on the catastrophe side, but on the liability side as well, and whether companies have any excess exposure to cyber risk. Now, when we look at what's in the press today, John, you also find that there's a lot of talk about ESG and climate change, and there are a number of companies, particularly the bigger players in Europe, maybe less so in the US, who are taking a very stern stance on the ESG climate change, signing up to sustainability indices and those type of things to show to the market that they are doing the right thing, not just for themselves, but for their investors as well, as we move forward into this challenging world.
The only thing I'd add is particularly for the London market, cyber is another big topic there. It's been a real key area of growth for that market. Perhaps one of the signs, aside from insurtech, a sign of innovation as well, that being innovative about the new products that can be written. But as Mahesh said, a key consideration for us as a rating agency is how are those companies managing the risk associated with that, the potential accumulations associated with that cyber business. Reinsurance is being used as one of the key tools, particularly in the London market, to manage that.
Thanks, Catherine. Let's turn our attention towards MENA. And Mahesh, can you give us a broad overview of the MENA market? Particularly, can you contrast between the resource-rich countries and the resource-not-so-rich countries?
Yeah, the Middle East market and the African market, I would say, they're in a completely different world, a completely different space to, say, the mature markets that we've just spoken to about. The dynamics of these markets are very different. Yes, they are challenging like the European markets. Some of them are profitable, other ones are not. But what we are finding is that most of these Middle East markets, particularly the GCC oil-rich markets, are dominated by a few players who drive the premiums in the market and have more than their fair share of profitability. And then you're left with many, many companies who are chasing very little premiums in the market. And that's the general dynamic that we see. Now, most of them are very much dependent on investment income to generate the returns. The technical profitability of some of these players, particularly the smaller players, is just not there. And the margins are being squeezed over time. So the shareholders are not really getting the ROEs that they're after. And this is all putting pressure, not just on the technical side, but on the investment performance as well. We'll have to see who's going to bear fruit over time from the changing market conditions there in the market, with the development of new and improved regulatory standards, which may put pressure on some company solvency requirements.
Is the market seeing foreign direct investment?
I would say foreign direct investment is more apparent, say, within the African reinsurance space rather than the Middle East. I wouldn't say there are barriers to entry, but in the context of the global insurance market, the Middle East is a small piece of the jigsaw, and we don't really see too many, say, foreign companies invested in local companies in the market. That's not to say that there is the encouragement there from these markets to open up and be more liberalised. In the UAE, we now see that companies can own above 50% of an insurer in that market, but we're not really seeing any traction there. And that may be down to the cultural divide that we have in these markets. A lot of these companies are family owned, and they do not want to relinquish control of their company. And you could say in some essence it's captive business, so it is harder for them to get in. And then there's the other question is, the markups that some of these companies are after, is it going to be attractive to another foreign company, a foreign player to come in and pay that premium for a company that may be doing marginal at best in a highly competitive market?
Thank you, Mahesh. Thank you as well, Catherine and Angela.
Thanks.
Thank you.
John.
For AM Best TV, I'm John Weber.